Thanks, Dash, and good morning, everyone. Thank you for making the time to be here this morning on such an important event, the future of banking and the Strategic Vision Conference, and what could be a more appropriate time than 200 plus days into this lockdown, where I'm zooming in from in the heart of New York City in Manhattan. Let me confuse you further. I have an Australian accent, that's where I'm from. I work for a British bank that has an Asian name and heritage, and I'm based in America. So if that's not confusing, then nothing is. But it also demonstrates the diversity of experience and background that I bring to looking at age-old problems and paradigms and thinking about the future and innovation, which is my role, leading innovation and strategic digital partnerships for HSBC based here in New York in the US. And I think it's really sobering and why this forum is so important, and why I want to say thank you to all of you who have taken the time to participate in the Strategic Vision Conference. Because what more time in history do we need a strategic vision in every aspect of our lives than October of 2020? And I mean that very sincerely. And it's now more important than ever, not only in a particular vertical, in my case, financial services, in all of our verticals and industries. And we need to continue to collaborate and work together, even in these remote times. And that's why today and this event is so important. So thank you very sincerely for making the time. And I hope that in 2021, we'll be doing this in person as we should be, to continue to learn, share best practice, and see where we went right, and where we could improve as organizations and industries and partners. Of course, I'm sure many of you, when you saw the stellar lineup for the speakers and the industries, you thought financial services or banking would be the least, would be the last, if even if it at all should appear on this stellar lineup of events and speakers and collaboration and thought leadership. Because of course the perception, in many cases fairly, is that banking is so far behind the curve when it comes to customer experiences, digitization, and innovation. And I'm going to humbly submit to you that you should start thinking a little bit differently. And that's why I'm so honored to be not only invited to speak for banking and financial services, but to open this conference and this event. And I don't know if they wanted to get me out front before everyone was kind of awake and participating to get banking out of the way, or quite the opposite, to get your attention to think through this important industry and what the future might look like. In our case, I think what the future is here today. But more importantly, we all rise and fall together. If there's one thing this pandemic has proven, is that not only are we interconnected as humans and industries, but we're actually also interdependent. Our success and failure is inextricably linked as human beings, as consumers, as companies, as industries. And I think that's really humbling to remember. And so when I think through my role, having joined HSBC, one of the world's largest banks in 2015, based here in the US, I think through an industry at that time that was very paper-based, that was very branch-dependent, that thought, digitization, innovation was, taking a piece of paper and converting that into a PDF. I think, most people and consumers would probably, if this was done in person, I'm sure I'd see many people in the audience smiling and nodding their heads profusely at me saying that. Of course, in 2020, soon to be 2021, the industry's changed significantly. And Dash was very kind to mention our historic case study with Pepper, the robot, the world's leading social humanoid robot and the world's first social humanoid robot to be put in a bank branch anywhere in the world, one of my projects, which I'll talk about amongst 3 other case studies a little bit later today. But what I think is most important is, let's just very clearly state what the future of banking means, because you can't manage what you cannot measure. And the way I think about the future of banking is a platform agnostic when, where, and how experience for our consumers and our customers. Let me say that again. A platform agnostic when, where, and how experience for our customers. Those customers can be people like you and I, or they can be large institutions and everyone in between. Platform agnostic means those same customers can be banking with us on their mobile device. They could be banking with us from the comfort of their home via a smart speaker. They could be banking with us in their car. They could be banking with us on their holiday. They could be banking with us on a tablet. They could be banking with us on a robot wearing a wearable device. They could be banking with us, of course, at a time of their choosing, 24 hours a day, 7 days a week, 365 days a year. Although in 2020, 366 days, it's a leap year, who could forget? And that's where this industry is heading. Where this industry is heading, and I think it's often forgotten, or at least not really articulated enough, is I see a future where your bank will actually become, in some ways, smaller but more ubiquitous. And what I mean by that is the way we've historically thought about banks and banking are these massive institutions that you sort of see everywhere with their brands, whether that's the physical enablement of that brand in a retail branch on your high street, or sponsoring some event. You see their brands. The brands are very important. A lot of brand equity that's been built up. But outside of their own ecosystem, you don't really see that organization, that institution. And I think the future bank is the opposite. You might see less of a physical presence of your bank, but your bank will be in more and more places, whether that's through open banking, or whether it's frankly putting a little piece of the bank in other people's ecosystems. Think through what a bank does and why a bank is important and why it'll become more important in a post-pandemic world. Banking is about access to capital, and it's about moving money, payments. Those two things alone will become much more ubiquitous going forward. And as we think through a more efficient allocation of capital, a future of banking, and we're already seeing elements of this today, but the future of banking is much more efficient allocation of capital, access to credit or debit faster. And on the payment side, the future of banking is a real-time movement of money anywhere in the world for a lower or price that's tending to zero, certainly at the consumer level. And the money will move as fast as you can click send. It'll be received on the other end in real time. That's pretty exciting. And it's even more exciting in a post-pandemic world when we get through this, hopefully together, hopefully sane, hopefully healthy, and we can all think through rebuilding the economy together, because we're going to need to. And in fact, financial services is going to play a much more important role than ever in that rebuilding of the economy, in that creation of wealth, prosperity, hope, economic opportunity, growth, and more importantly, funding entrepreneurs and startups and small businesses to do what they do best, which is to create things we've never seen before. That's why we're in financial services. That's why, if I can paraphrase the name of my first book, that's why finance is a force for good in the world. And we need to continue to remember that and promote that and work towards distributing that at scale, which is what the future of banking is all about and should be all about. So here's a couple of things I want you to think about. The first is, how do I think about innovation? Because often I meet people and they say, oh, wow, they look at the business card, or they hear me speak at something like this. They come up to me afterwards and they say, wow, I didn't realize banks do innovation, or I'm trying to do innovation at my bank or my Fortune 500 company. I'm having tremendous difficulty trying to get buy-in from my team or my leadership team or my executive committee. There's a lot of skepticism. How do I measure this? How do I manage this? How do you justify your existence and measure success? And so the first thing I would say, and I alluded to this before, you can't manage what you cannot measure. The first thing I did when I joined HSBC was create a definition for innovation. Very important. And the way I define innovation is doing something differently that creates value. I'll say that a little bit slower for my excitement this early morning with my fast Aussie accent for those who may have difficulty understanding. Innovation is about doing something differently that creates value. The key thing is challenging a paradigm or a status quo or a business model or a way of doing things, but it has to create some sort of value. And that could be shareholder value, value to employees, revenue opportunity, expenses, opportunity, et cetera, et cetera. The key thing, though, is the value piece. We all have ideas. We all know people who have ideas. Talk is cheap. Execution of those ideas is very, very difficult. Execution is really hard, especially in a large corporation, especially in an industry that's highly regulated, and many would consider to be risk averse and conservative. So execution is really hard. Ideas are free, talk is cheap, they're easy. Executing them and adding value is really, really hard. But again, the definition that I created, doing something differently that creates value, means that every single person in an organization can be doing innovation, can be doing something differently that creates value. Not just the, that sort of off to the side innovation team or that crazy technology team that no one really understands what they're doing in the skunk works or that sandbox they're playing in. Every single person in an organization, in your organization, can and should be doing something differently that creates value. That's how you create this culture of innovation within your organization. That's how you get people thinking outside the box, outside the status quo, and more importantly, trying to execute to make real change happen for your customers, and more importantly, I would argue, for your people. Because if you look at employee engagement scores, even before the pandemic, across almost every industry, they spoke for themselves about disengaged people in your firms, disengaged human capital. Of course, in this post-pandemic world, or sorry, during the pandemic, with people being forced to work remotely, it's not a surprise where you see employee engagement. It's not a surprise where you see people's mental health being working in their small apartments or their unsatisfactory home working environments that they were forced to do in a hurry. Yeah, they probably made it work for the first month or two, but 6 or 7 or 8 months later, these are just aren't fit for purpose. People missing their physical work environment. They're getting repetitive strain injuries and all sorts of working from home aches and pains and niggles. But more importantly, they're missing that collaboration. And collaboration is key with your colleagues, with your peers, with your competitors, with your leadership teams, with your team members, your subordinates, with your customers. And people are recognizing that. And of course, to do innovation, where to use dare I say, a football or a soccer analogy, to do innovation, you're not a traditional position on the field. You're actually trying to play between the lines. You're that creative sort of attacking midfielder that's sort of trying to create space through the lines to put that through ball in for your striker to score, to try to thwart an attack, to protect your defenders. But you're playing within the lines and having that little bit of extra freedom to be able to see an opportunity and go and execute that. And of course, it's October 20th. And my beloved Manchester United are playing in the Champions League today in Paris. And come on, you Redmen, let's go for it. Let's do it. Sorry for anyone out there who's a Liverpool fan or a Paris fan, but it's a little bit of fun. Point being is that's the way we need to think about our roles. Now, the point is that as we think through innovation, every company, in the world needs an innovation and renewal and growth strategy. Think about it. If you went into lockdown without the capabilities to deliver to your customers or your people remotely, digitally, and probably on a mobile device, if you didn't have those capabilities before a lockdown, good luck trying to compete. Good luck trying to compete. Because think through what the lockdown has meant. By nature, the lockdown was about forcing people in their homes to stay in place. So therefore, every service had to be delivered digitally. I mean, you think through how entire industries have changed and be reshaped in the blink of an eye. Now, that poses a challenge for financial services and banking. In some ways, it's brought forward behavioral technology adoption, digital adoption for financial services almost a decade. And there's various studies, which I'll talk about in a second, brought forward digital adoption 5, 7, 10 years in the space of a few months. And that's incredible. Any more than what it's meant for every other industry that financial services touches, and why the future of banking is going to be, as I said earlier, embedded in other people's ecosystems. Think through, for example, e-commerce. I don't think there's anybody watching this who has not bought something online. And I suspect if we were doing this in person, I'd be having someone put up their hand right now, or I'd be seeing faces, or in fact, people just checking their phone to check how that online order is going. I think in the last 24 hours, I've had, 3 or 4 different Amazon deliveries to my place alone. This is not a trick question. Does anybody know? Of course, it's a loaded question because you can't answer it because we're in a virtual world, but feel free to send me an answer in the chat if you want. Does anyone know pre-lockdown what the percentage of e-commerce as a total of all commerce in the US, what that number was. So just let me ask you that more clearly so everyone's clear. E-commerce as a percentage of total commerce in the US before the lockdown, what was the percentage of the total e-commerce relative to the entire commerce ecosystem in the US? I've given you some time to think about it. I'm sure in the virtual world, I'd be throwing numbers at me as we speak. That number was 16%. So think about it, say February, March of 2020, e-commerce was only 16% of all commerce in the US. So think through it. Let's just rewind our brains for a little bit. In the entire history of e-commerce, which I'll be generous and say is about 20 years old, the entire history of e-commerce, call it 20 or so years old, got to 16% penetration of all commerce. Pandemic roared through the world, government lockdowns in virtually every major Western, or in fact, every major city and country around the world, on or around middle of March. By May, June, could anyone guess what 16% had changed to? Either higher than 16, same as 16, or lower than 16? Giving you a little bit of time to think. 3 months into the pandemic, e-commerce as a percentage of all commerce in the economy had gone from 16% to 33%. So it had more than 100% growth in the entire lifetime history of commerce, e-commerce, 100% growth in 3 months. It's incredible. Now, that was in June. I haven't seen the latest numbers, but I would be pretty safe to bet, if I had to, that the number is higher than 33% now in October, almost November. And at the very least, it hasn't got lower than 33%. That would be my bet. And in fact, with Black Friday coming up and Thanksgiving and Singles Day and all Amazon Prime Day, and all the US retailers trying to create their own sort of internal shopping network day via e-commerce this month and next month, and then leading into Christmas sales. I can only imagine what that number is going to be. But the point I'm trying to make is that in the entire history, the lifetime history of e-commerce as a percentage of all commerce, we saw 100% growth in 3 months. That's extremely humbling, everybody. It is extremely humbling. Because, by the way, numbers like that, tectonic shifts in consumer behaviors and industries, it's not just e-commerce. It's not just e-commerce. That's very humbling. What does it mean for your industry? What does it mean for your stakeholders, your secondary and tertiary industry partners, counterparts, suppliers, stakeholders? Very humbling to think about, isn't it? And from a financial services perspective, it's extremely humbling to think about, because we're involved in just the whole payment ecosystem, at the merchant level, the issuer network, the issuer, the network, payments, cards, peer-to-peer payments, you name it. We're involved in every aspect of the supply chain of how money moves. As I said before, efficient access to capital and real-time payments. But this is the new world we're living in. Now let's think back to consumer behavior and how that's changed, because this is really, really important, because I want you all to think about this and your industries and your companies and your teams. Now, when I grew up in Australia, I remember my mother would tell me that it takes 21 days to form a habit. And that's how I've grown up my life. 21 days, 3 weeks is how long it takes to form a new habit. I never really thought, who am I to question my mother? And then the pandemic hit, and in March, and we had to sort of forcibly adapt. I've been in lockdown, living and working from home in Manhattan since the 10th of March. So I started being remote about a week before New York went into lockdown. It is now the 20th day of October. So somebody can probably count up how many days that is. I know it's more than 200. I don't know. I don't know, you know, is it 220? I don't know, but it's a huge number that I stopped counting. I know it's north of 200 days inside. And let me sort of share something with you. This 21 days to form a habit. I did some study on it early on in the lockdown to find out if that was actually true, because what I was observing in myself, in my team members, in my colleagues, in competitors, in other folks, was their behaviors were changing pretty quickly during this lockdown. Humans were forced to adapt. What I found, and I welcome anyone to reach out to me on LinkedIn. In fact, everyone should reach out to me on LinkedIn, and let's connect and keep this dialogue going. But if anyone has any better data on this, please share it, because I'd be fascinated to read it. But what I found was that the European Journal of Social Psychology published a pretty comprehensive analysis on just that. How long does it take to form a new habit? And what they found in the study was that it takes, on average, 66 days to form a new habit. So 66 days, call it 10 weeks. 10 weeks is very different from 3 weeks, by the way. But then remember, that's the average. So there's easy habits. You know, maybe it's, you know, drinking one less cup of coffee a day or something. You could probably do that in 21, you know, certainly less than 66 days. It might only take you a week. But, you know, if it's, you know, exercising 7 days a week, that might take you, you know, 9 months to do or something to get that habit right. But on average, it takes you 66 days to form a new habit, call it 10 weeks. Well, I just told you I've been indoors for 200 plus days. I've done that 66-day cycle once, twice, 3 times, now my 4th time. And I'm sure, you know, everyone watching this is exactly in the same boat. I know our customers are. There are literally billions of people who are in this boat around the world. So what does this mean? And this is what is actually much more important. What does this mean? This means totally new consumer behaviors, totally new workplace behaviors, and even human behaviors have been formed. These new habits that are going to be very difficult to unform the longer this lockdown continues. For example, just think through the nature of your workplace, the future of your work. Just think through the mental health and fatigue of your team members. Just think through their creativity, their innovation. On the one hand, some folks have probably got a ton of ideas, and other people have just become even more insulated because they've lost all that sense of creativity. Any more than productivity, efficiency, collaboration, team members, you know, stakeholders, management, you know, best practice, et cetera, et cetera. Motivation. What about your customers? What about the people who pay you money, who keep us in business? I gave you the example before about e-commerce and the 100% growth in 3 months for the entire history of an industry. That's just a tangible example of proving my point about how customer behaviors have changed. How many of those people, of the billions of people who have bought something online, you know, in the last year, or the last 6 months during the lockdown, 7 or 8 months now, during the lockdown, who did it for the first time, and then had to do it the second, the third, the fourth, the fifth, the sixth, the 200th time during this lockdown? How many of them are going to stop doing that when this ends? Or in a financial services example, if you've been a traditional bank branch customer, and by the way, that's my father back in Australia. He loves his bank. He loves visiting his bank branch. And I've been telling my dad for years, Dad, it's time to get internet banking. It's time to bank on your phone. It's more efficient. In some ways, you could argue it's safer and more secure. And also, just from a risk management standpoint, you know, think about if anything were to happen to him, what about how would my mother access, you know, her financial needs if it's sort of a primary relationship with him in the bank branch? So give her, you know, the capabilities as well. So my dad's a pretty, you know, proud guy, dare I say stubborn. And he had the bank branch literally downstairs from his apartment where he lives. And he was pretty happy with that. And if his particular bank, he had a branch next door from a competitive bank, which he could always go to get cash if he needed, or for whatever his needs were. Lockdown, bang. Speak to my folks in Australia, how they doing? Month in, my dad drops in conversation that he just started using internet banking. Now, he's just started using internet banking in kind of, call it April. He uses internet banking in April, he uses it in May, he uses it in June, July, August, September, October. He may go back to visit his bank, but chances are he isn't, because he's become so accustomed. He's gone from like both extremes, right? Becoming a sort of a digital Luddite in a banking sense to becoming all in digital banking sense. And he's gone from both extremes. Now, he's the first to admit everything I was telling him about digital banking was right, and he couldn't believe he didn't do it earlier. He's not the only one. When you force, shutdowns of the economy, we're seeing shifts in behaviors in financial services amongst every other industry. And the other thing I would say, counterintuitively to that point, at least in the US, I can't speak for other countries, I can only speak for our experience here. Financial services, bank branch were considered essential. Even during the darkest depths of the pandemic in March, April, May, I was going out to visit team members and colleagues in branches just to say hello, just to be solidarity with them, because they were working. They were still serving those customers. Maybe there were less customers. They were still serving those customers who needed, in large part, it was cash or safe deposit needs. But financial services, counterintuitively, is an essential service. And by the way, it is, especially in this modern day economy where money, in many ways forms the foundation of how this system works. And indeed, in the depths of despair and emergency lockdowns and emergency powers and martial law, cash is still king. In fact, cash becomes double king, as we saw in parts of the US. But thankfully, at least from what I heard from customers and my own experience, the payment networks all worked, even in the depths of despair, and people could use debit and credit in addition to cash, which thankfully was, the consequences of this already terrible lockdown and pandemic would have been eminently worse had the financial system not been able to cope. So we come back to those changing shifts in behaviors in financial services in particular, which comes back to what I was saying earlier. The future of banking is a platform agnostic when, where, and how experience, where customers, personal customers, broader consumer market, major corporations can bank when, where, and how they choose, at the time of their choosing, with efficient access to capital and real-time payments anywhere in the world, where literally by the time they've clicked send, it can be received. Now, very quickly, to talk through a couple of case studies of how we've been doing that. Dash mentioned earlier in the introduction the case study of the world's first social humanoid robot named Pepper that I was honored to lead and my team lead, which we launched in 2018 at our flagship branch in Manhattan in the heart of Fifth Avenue, arguably the most famous street in the world. We worked with our partners at SoftBank Robotics to deploy Pepper and customize it for a banking use case. Initially, we were thinking through improving the customer experience. What we quickly found was that deploying a robot, a social humanoid robot, a physical robot that can walk and talk and interact with you as a customer, in addition, so not to replace, but in addition to our awesome team at our flagship branch in Manhattan, was a boon for employee engagement. Pepper was part of their team, but a boon for customer experience as well. My team led a design thinking workshop, and we did some very detailed analysis over a 3-month period, measuring every single thing that moved in the branch, literally everything that moved, customers, non-customers, positioning of branding, you name it. Fascinating, comprehensive study. What we found was that 73% of time spent by our people, and therefore our customers, were what we would describe as a binary or generic interaction, a sort of a one-way interaction. Customer walks in off Fifth Avenue, they want to ask, where is the teller? Can they deposit a check? Where is their mortgage advisor? Some sort of FAQ about sort of some financial service, or even where is the nearest Starbucks? And when you've got a highly trained staff, that's not really fun for them. And it's not really the best use of their time, nor is it, frankly, customers or non-customers who walk in to ask that question. Trust me, they don't want to be asking that either. They feel just as embarrassed. So our initial hypothesis was that if Pepper, our social humanoid robot, could take capacity out of the line and solve those binary generic interactions in a gamified, fun, and dare I say, awesome way. If we could free up 73% of time, give back that to customers and our people, which is 3/4 of their time, that would be an awesome experience. What we found was that when we launched in June of 2018, was we had record foot traffic. The investment for the robot paid off within 3 hours of launch because we had so much new business and amazing foot traffic. What we soon found was that when we did some data analysis of what customers were asking Pepper for, and remember the way we designed the use case was there was zero customer data, zero personal identifiable information quite deliberately. What we found was the number one product related question to Pepper, the robot, was tell me about credit cards. Now, the response in version 1.0 was, well, these are our credit cards, these are our products and features, and the same stuff you could get online. But then we found was at the intersection of another innovation-led fintech partnership we did for straight-through acquisition for credit cards. We intersected those two together, where version 2.0, where we quickly iterated after 30 days of the Pepper use case, just for credit cards, was tell me about credit cards. Pepper would tell you the product, services, and features. And then Pepper would ask you, the customer, would you like to learn more about that credit card? Which was another step. So then customers had the choice, if they said yes, to then voluntarily consent to give their email address or cell phone number. By the way, Pepper didn't store those details, so we had no way of being able to look back for privacy reasons, very importantly, but then would text via the phone or via email to the customer or potential customer a link to our public website with that straight through credit card journey, where they could learn more about the product or service, and if they so choose, then they could actually apply for that product on their personal phone or tablet or desktop. And we could do the opposite of what I was just saying earlier about online growth of commerce. We were promoting offline to online commerce and financial services, in this case, credit card acquisition. Suffice it to say, that was an amazing unintended consequence and positive development for the robotics use case, making history. We're now in 9 markets, 2 countries. We have 1 more to go, which I'm hoping that even we'll be able to get done just after Thanksgiving. I won't be able to say where, but watch this space. We had over 5 billion with a B, media impressions across traditional and social, with 99.9% positive sentiment. When was the last time a story about banks that went viral was positive? And it's not often that happens. And this was, by the way, a story about robots in banking and improving the customer experience and your employee engagement and driving record foot traffic. It's an incredible case study, absolutely incredible. And by the way, fast forward to the post-pandemic, you're going to see much more ubiquitous use of robotics in all aspects of commerce. All aspects, industrial robotics, cleaning robotics. In fact, you're seeing a lot of technologies out there. Well, I'm seeing, in fact, because I've just been fascinated by it, that can you imagine in the height of the next pandemic or in an unsafe health environment where we're going to send human beings in hazmat suits to go and disinfect an airplane or an office block or a highly sensitive laboratory or something if there's an outbreak. A robot could do that, and probably should. And it's probably safer for your people. You could redeploy them in other areas of higher value, and it's probably cheaper as well. And no disrespect to the robot, but if the robot is irreparably damaged, then it's a different emotional circumstance to if it's a colleague of yours. If there's a tragic event because of some health issue, for example, we're going to see way more robotics all across corporate America post-pandemic. You watch this space. We are proud to have launched the first case study in financial services, which to this day still exists, and I welcome you to come visit. Even Pepper wears a mask in the branches she's open, the branches that are open where she is today. We also launched the world's first case study deploying wearable technology in a bank branch. We did that in partnership with Samsung. My hypothesis at the time was, at our flagship branch in Manhattan, it's over 3 floors, 25,000 square feet. The branch was built, 60 plus years ago. Well, the building was built 60 plus years ago. So the branch itself is not necessarily fit for purpose. It's a beautiful location, but it's not necessarily fit for purpose in the 21st century. And traditional corporate communications, like tablets, computers, laptops, landline telephones, are tethered to desks and walls, but our customers want to be served when, where, and how they choose. And anyone who's a New Yorker, I'm an Aussie, I'm pretty laid back, but even I've discovered that in Manhattan and in New York in particular, they call it the New York minute. If customer best practice for average waiting times in financial services in the US is 4 minutes. In Manhattan, 4 minutes is like 4 years. Customers want things done last week, forget yesterday or today. So 4 minutes is way too long. So what could we do to, in some ways, have more efficient team member, person-to-person communication in our flagship branch? If so, if we could overcome that issue, could we get some sort of efficiency dividend by being able to serve more customers in less time, or more customers in the same time, in the same amount of time? And if so, then we could reduce customer waiting times. And because of the interviews we did with the team and design thinking workshops, banking is a dangerous business. Could we in some ways enable a security feature? Now, I'm a big proponent of wearable tech. I love wearable tech. I can't believe that wearable tech isn't, I don't want to say mandatory, but at least not as ubiquitous in corporate America as having a laptop is, or more so. And so we worked with Samsung, who proved to be the most technology savvy, enterprise ready, dynamic, aware of financial services and the complexity of our industry, to customize their Samsung Galaxy smartwatch for every member of the team at the flagship branch initially. And as I said, we had sort of 4 key objectives. One, could we optimize person-to-person communication? Again, no customer data, no PII. We had a series of preset messages on the device, so that if a customer walked in on Fifth Avenue, they were here to see their mortgage advisor. In the old days, the customer service rep or that universal banker, the first person they would meet would have to unlock their computer with the 17 different passwords to send an email to said mortgage advisor who's downstairs under a 6-foot concrete floor where the cell phone doesn't work, so you couldn't call them or text them. They'd have to unlock their computer with their 17 different passwords to read the email. It might have been with a customer at the time, so they're not really checking the email. So you can just see the supply chain going wrong, and 4 minutes becomes 14 minutes unnecessarily. So with wearables, customer could walk in, the universal bank could essentially always maintain eye contact with the customer. Literally, with the turn of the bezel on their device, turn it to find the right person, click a preset message that included, your appointment is here. So no personal identifiable information. And within the fraction of a second, that mortgage advisor in that example would get a little ping on their device with a little vibration that would say your appointment is here. And they could very subtly, even if they were with a customer, very subtly use the bezel, turn the bezel for a preset response, which could be as simple as coming right now, I'll be there in 2 minutes, 5 minutes, or running late, be there in 10 minutes. And within a fraction of a second, the universal banker could then tell the customer to set their expectations. Hey, Steve's on his way, or Danielle's going to be 10 minutes late, wanting to take a seat, play with Pepper, can we make a cup of coffee? How can we help you today? Completely different customer experience. It's completely changed the expectation. And what we found was, and not only could you do preset text messages only within the network of the other devices, but you could also make a phone call. And when the media came to do, because of course this was historic, when the media came to interview our frontline team, our branch manager, and this was remarkable, when he was asked, how does he feel? How does his team feel? He said, I feel like 007. I can call anyone in my team, literally make a phone call through the watch to any member of my team. I feel safer. And he said, this is sexy. This is sexy. Well, again, never in financial services or the history of banking, I think, has anyone ever said that about the technology they use. We absolutely saw efficiencies. We saw optimized communication channels. We saw definitely reduced customer waiting times. And finally, we embedded a security feature, which I don't want to talk too much about for obvious reasons, but we embedded a security feature that protects our staff with that device. As you can expect, banking is still a dangerous business. And so we got more adoption with the technology by building more trust with our staff and our teams by embedding a proprietary security feature in the device. The other thing we found was that when our teams were playing with the devices on day one, is the first thing they did was went down to the bank vault. Now, historically, our bank vault is built deep down into the ground. There are like 6-foot concrete floors, between our sort of lobby main and then the floor below, then the vaults deep below that. Traditional cell phones don't work. They don't work in the branch, let alone in the vault. Because again, the building was built 60 plus years ago and built differently, and there's no cell phone coverage, which also creates a risk. Because of the advanced LTE micro SIM card in the watches, the first thing the team did when they were goofing around was one of the team went into the vault and started sending messages to one of their colleagues to see if it worked. And he was so surprised not only that it worked, then he tried to make a phone call. He couldn't believe it when one of his colleagues upstairs answered the phone on the watch. And he couldn't wait to tell his colleagues what had happened. And their trust levels, so if anyone was skeptical of this technology, their trust levels went through the roof. Because not only could they realize their employee engagement and efficiency dividends, but wow, if there's ever a problem, heaven forbid, and I'm in the vault, I can be protected. So that was a security feature we mentioned. And then finally, with the little bit of time I have left, we launched something early this year, pre-pandemic. I announced it in Las Vegas when I was allowed to travel, when we could travel, in January at the Consumer Electronics Show, in partnership with Google, a brand new technology and enterprise level system in concert with another company called Valara for real-time translation. The Google Nest Hub had been built a new device, but think of Google Translate on steroids for an enterprise level, which was embedded in that device. We were the world's first and only bank to partner with Valara and Google on this, to take this Google Nest Hub that could do real-time AI-powered translation capabilities in 29 different languages initially, and deploy them in a number of our branches in Manhattan, which we did early this year. HSBC, we're the world's leading international bank. In the US alone, about a third of our customers in the US alone are, dare I say, people like me from another country. One of the observations that was, as an Australian coming to New York in 2013, and having traveled to America almost every year for the last 20 years, at least once, either for business or personal reasons, I took it for granted that people here spoke English, until I decided to move here and I realized Americans speak a completely different type of English to Australians. And quite seriously, it was very frustrating, bordering on embarrassing for me, when thought I was asking basic interactions with people when I first arrived, and people couldn't understand what the hell I was saying. Where can I get a water? Can I get a coffee? Like, people were not understanding what I was saying. I had to repeat myself multiple times. Very, very frustrating. I remember thinking at that time, in 2013, but I thought I spoke English. What about those who don't speak English, and English is their second language, trying to interact in this country for all sorts of commercial reasons, forget financial services? And so one of the actually interesting things I found with the Pepper case study, the robotics, is when I first met Pepper, just to slightly deviate from this case study, but it proves the point, or illustrates the problem and the point, is when I first interacted with Pepper, the robot, when I first met her at a MasterCard innovation lab in 2016, was when I spoke to Pepper for the first time. She understood me, and I was blown away. I was expecting this piece of technology, this robot, to have even more difficulty understanding my Australian accent, and I even put on the Australian accent even stronger than it was to try to test out this robot. And this robot understood me first time. I tried it. I was so bewildered, I couldn't believe it. I tried it again. I was trying even more complex, and Pepper understood me. Now, that was 2016. The natural language processing capabilities, just think about the updates in your average cell phone in the last 5 years, how much improvements there are, let alone the NLP capabilities and the chatbot capabilities just in Pepper, any more than to this Google partnership. Ironically, the Pepper robot uses Google Dialogflow for the chatbot. So, in many ways, it's a similar technology in the Google Nest Hub, and with the Valara capabilities embedded, real-time translation that we deployed. But there are 70 plus million Americans whose English is their second language. 70 plus million Americans. So I think through my own experience of being an immigrant to this country, just how complex financial services is here. Consumer finance is very complicated for everyday Americans who've grown up here and English is their first language. Imagine what it's like for immigrants or immigrants whose English is their second language or who have difficulty communicating. So we wanted to deploy this historic case study with Google on the Google Nest Hub with interpreter mode at our branches. It's at the branches we've been deploying it to see if we could deliver a world-class first impression for customers whose English is not their first language. Now, candidly, we're not here to do a mortgage via this real-time translation. That's not what this device is about. But what it is doing is giving that great first impression. Maybe it's welcoming a customer in their native tongue. It's them being able to speak to you in their native tongue. The device can translate to the employee to the customer service representative or the universal banker. And to be able to manage and set your expectations, and if need be, to say, we can help you, please take a seat. We will find somebody who can communicate with you, even if it means a phone call or coming back another day. But imagine that first impression. And we think through the power of financial inclusion, how important it is. By the way, this was done pre-pandemic. Consider what it's like now, how important it is. We want to achieve, greater financial inclusion capabilities, using the technology to embrace more folks who speak another language, to be able to serve them, again, when, where, and how they choose. So those are three amazing case studies. And actually, I want to pivot on the second one, the Samsung one, just for a minute, because how we've adapted that in this pandemic world is really important. So, we think through social distancing. Social distancing was a term that I'd never heard of before March 10th. Now it's as ubiquitous as saying, oxygen or something, or water or whatever, coffee. And there's clearly technology going to have a greater role to play to help with getting back to work and enforcing social distancing, or helping to promote social distancing, promoting social distancing, should I say. And when this whole thing started, I thought to myself, my God, what else can our wearable technology do to help with this when we eventually get back to work, or to assist our frontline staff beyond what they're already doing? And so I remember speaking to my team one weekend, Monday, that I'd been thinking about it all weekend. And I just sort of had this aha moment on the Sunday. I was like, wait, each of these wearable devices has its own SIM card, a micro SD SIM card with advanced LTE, soon to be 5G capabilities. And therefore, it has a unique IMEI number, and therefore an IP address or geolocation and coordinates. So if each watch has one, then the other watch has that too. Surely at the enterprise level and the cloud, we could just create a notification that if two devices were within 6 feet of each other, there might be a notification, some sort of vibration or message that could be sent to the or however many devices are within 6 feet of each other, that, hey, stay apart. So spoke to the team Monday, spoke to Samsung Tuesday, and sure enough, Samsung, again, just totally responsive, totally, but like, actually, it's funny you say that. We've been talking to another client about doing just that, and we're about to pilot something with them. Let's get you involved in that too. You may have seen on 60 Minutes, I think it was Ford Motor Company in Michigan, who they were interviewed, and they actually showed the wearable technology, the same solution that I was talking about with Samsung on their factory floor. Now, granted, financial services is very different to the factory floor in an automotive manufacturer. But when we think about going back to work, and we are doing that, when we think about going back to work, we think about, this work remote environment. If one person, how do we know if someone gets sick? Who do we isolate? Who do we self-contain? Who do we send home? Where do we close off? We don't. Technology can help that. And so the wearable device, the pivot with a company called Radiant on this Samsung wearable solution that we deployed, means that amazingly, if people come back to work in the corporate office environment, for example, wear their Samsung device with this social distancing feature powered by Radiant that we've deployed, if someone, heaven forbid, gets sick or infected, we'll know who they are, but more importantly, we can trace who they interacted with, where they sat, where they moved to. So that if we had to isolate we wouldn't have to isolate the entire building necessarily, but we could isolate a team or part of the floor where they sat. In addition to the tactical social distancing feature of awareness, rather than having to shut down the entire office and then lose any productivity benefits we gain from go back to work by sending everyone back remote on a moment's notice. So there's huge dividends there. And again, just like I said, robotics are going to become more ubiquitous post-pandemic. So is wearable tech. It's inevitable. I'm amazed. There are so many use cases for wearable technology in corporate America and the Fortune 500, that I'm just blown away that this is not just BAU. And that's another case study of work we led that I'm really, really proud of my team. We were first. And the point I'm trying to make is, if banking can do it, if boring banking can be at the epicenter and the cutting edge of robotics, wearable tech, artificial intelligence, and we were doing this pre-pandemic, then no other industry has an excuse. And in fact, the lessons we learned with our pilots, wearable tech, robotics, AI, in many ways have given us ways to pivot and think through, just as I mentioned, how can we take these technologies and pivot them in a post-pandemic social distancing world to get our folks back to work, to help our customers be safe, feel safer when they interact with us or with our competitors or with other industries going forward. This is so important. This is the future of banking. It's a platform agnostic when, where, and how experience. It's exciting. I hope everyone is awake now. This is an honor to be here. Please reach out to me on LinkedIn. Let's continue this conversation. I want to thank you for your participation and your attention. I would love to hear from you and share best practice and ideas. We are all in this together. That's the main thing. We're all in this together. We rise and fall together. We all share the same customers. Let's deliver a better customer experience for them. Let's create more utility, productivity, and meaning for our teams and our employees and our workforce. And frankly, let's build a better world together. Thank you very much, and have a great rest of the day and rest of the conference, everybody. Cheers.
Thank you very much, Jeremy. It was for getting us started with that keynote. It was fantastic to hear a football analogy in the context of banking. I have to tell you, I'm actually also a Man United fan, and I'm very happy that we finally have a good number 10 in Bruno Fernandes. And I don't think you'll mind me saying that, or calling you the Bruno Fernandes of HSBC. Great. So I'm really excited about our next panel, guys.